The market surging off those Christmas Eve lows. The S&P now out of correction territory with the majority of the stocks, soaring double digits since the bottom. But a number of names have sat out the rally. Dom Chu is breaking it down back at headquarters. Hey, Dom.
Well, oh, what a recovery it's been, Melissa, after the carnage on Christmas Eve. The S&P 500 has risen in V-shaped fashion. It's gained around 14% since that near-term bottom. That's also, by the way, what the average S&P 500 return is for a member stock during that time frame as well. There are outperformers and there are underperformers. Let's focus on some of those stocks that have sat out the recent rally. You've got the consumer discretionary sector. It has been a big outperformer since the lows, thanks in large part to Amazon.com. But other retailers have sat out, like Macy's, which is down around 9% during that span, thanks to disappointing results from the holiday shopping season. Newmont Mining down around 8% as well, but in large part because of its big stock and cash purchase of Gold Corp. Domestic tobacco giant Altria is also underperforming, but up about 1% or so as investors really take stock of the future, not just of tobacco, but also vaping trends and also the cannabis industry. And Delta Airlines up around that same amount after an up and down ride for shareholders given concerns about future guidance. Those are just a sampling of some of the underperformers, Melissa, as traders really try to evaluate whether some companies and stocks are better positioned to catch up to the market's recent run than others. Back over to you.
All right. Thanks, Dom. Have a great weekend, Dom Chu. So are any of these names about to catch up to this rally, or should they be left in the dust? We thought we'd play a little game of
Trade it or fade it.
Trade it or fade it. So let's go through each of these names. Newmont down about 8% since the market low. Trade it or fade it, Tim.
So again, my tendency would be wanting to say trade it because that really means I would actually sell it, but I'm not going to say I'm going to play the game.
Why every single time you have to go through this explainer? Just get with it.
Fade it. Fade it. Bottom line is there's consolidation in the gold sector. That's not a reason to buy a company. In fact, I think they're consolidating out of weakness. And I don't think that, the bottom line is the underlying asset prices are not being valued the way they were 5 to 10 years ago.
How do you feel about Newmont?
I think gold has got a lot of momentum. I think it outperformed last year, which you know, and I think it's got surprise potential this year when other things will disappoint.
So you would...
He's a trader.
Sure.
Carter Braxton worth a traded. G Swizzle over here on the hook is also a traded.
Really?
For similar reasons. Listen, no, not M&A.
Okay.
I'm going to throw that out the window.
All right.
But I'm going to say the commodity itself seems to be getting life once again. And if the dollar's going to weaken with this Fed that is imaginarily turned dovish, I think there's a real chance that gold gets some giddy up over the next couple of months. So with Carter, I trade it.
Interesting. All right, we go back to Guy here. For Macy's. Macy's is down 9% since the low. So trade it or fade it, Guy?
Yes, I'm going to trade that one, Melissa. And I'm going to trade it because, thank you, appreciate that. Because if you look on January 11th when they reported, I believe, the single worst day in the history of the company as a publicly traded company, the volume was tremendous. In my world, that's a bit of a capitulatory bottom. The story hasn't improved all that much, but you could absolutely see the shares continue to rally. So in this game, when we're looking for moves to the upside or the downside, I think the downside's over for now. I would trade it.
Yeah, so I see no absolute reason to even look at this name. I mean, you just fade it.
There we go.
No, I mean, but like, if we're just talking about, we just had this reflex move. The average stock is up 13, 14%.
And this hasn't moved. That's why we started this segment
this thing
this way.
hasn't moved. I don't know why
it.
you would even get near this thing because all of us were in agreement that we're going to go back and retrace some of this move. So why would you want to try to pick at the worst performing names?
And it peaked in July of 2015.
Yeah, stop it, guys.
So you're faded, guy?
Yeah. No, okay.
Tim, you're in his camp.
I would trade it at these levels, and here is why. First of all, it was being pushed around up into even those terrible numbers because people thought of it not only as a secular play, but a cyclical play. They were all getting destroyed. The rest of the discretionary names and some of the retail have come back. People are pricing this thing like it's going out of business. It's not. It's 6.5 times with a 6% dividend yield. It's not a great company. It's way too cheap.
We're going to move on to Altria. This is Carter's. Altria is up 1%. Carter, trade it or fade it?
Fade it. I mean, this is just boring money. If you want to sit around and wait for a dividend, maybe it gets cut, maybe it doesn't. I mean, it's one of the greatest all-time winners, if you look at this on a long-term basis, quintupling the S&P and especially so total return. But its best days are behind it.